All right, everything looking good. We are live. Let's go ahead and get the stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market update. It is 11:15 a.m. Eastern Standard Time on 7/15/2022. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and get rolling. So obviously, a little bit of confusion in the markets. We saw a little bit of a negative reaction with the initial CPI print. And then since then, we have seen a little bit of strength in crypto continuing. And we'll just kind of take a look at everything else. We see some weakness in the dollar, weakness in gold, pretty much some weakness in everything. While crypto doesn't look particularly amazing on longer time frames right now, the shorter time frames are starting to develop rather nicely. So, but let's go ahead and jump right in and take a look at what we've got going on here. So looking at the TNX first, 10-year Treasury yield, we see it is fairly comfortably settling below the 8 and 21. We did get the hard buy signal. We did come down and put in a higher low. But now that we're starting to pick up some momentum to the downside, the real question is when we come back down here to the lows, are we going to take out this swing point right here? So the key level to watch is at 2.723 level. We still see that daily bearish divergence playing out between our two peaks. Going over to TLT, we see we're still in the process of that back test on the 20-year Treasury bonds. As long as we're below that resistance, we would expect it to act as resistance. We also have that descending channel. If and when we get above 119, I think it's very likely that we get a test back up to that 129 range, and that will be our target for sure. The VIX is back down at the bottom of our ascending triangle or ascending channel. So as long as we're near the bottom of the range, we would expect the range to hold. So we assume that it's pretty much only upside from here. As a move back up on the VIX, somewhere closer to like 33 seems very likely. Staying within the range, but back at the top of the range. And we know also, obviously it's the 15th. We have our Fed meeting on the 23rd and 24th. So basically, I mean, we've been talking about it, but obviously going into the weekend, we have today left. Markets closed on Saturday and Sunday. And that puts us at the 18th. So then we basically have one more week worth of price action before the Fed funds meeting or Fed funds hike or Fed Reserve meeting, however you want to phrase it. The way I look at it, it's still just that hourglass full of sand, and it's just counting down. So, crypto has been lightweight taking advantage of it with a little pop back to the upside. Equity markets hanging on. I mean, I guess if you look at the shorter time frames, some of these things don't look as bad, but when you look at the daily up, they just all look atrocious. So as far as the VIX is concerned, basically at support. So we would expect it to bounce over, essentially the next week. So U.S. oil came down here to our exact area, found some support at the 200 exponential, the 200 simple, and the bottom of the channel. We see a pretty strong rejection candle, rejection of lower prices with a huge candle down, and then it gets bought all the way back up to support. So that puts us in a weird situation now because we have a low back here. We have another low back here, same low. If you go by wicks, which I normally don't, we have a new low. But if you go by closes, we technically still have a higher low. So it's in a strange situation where it basically is finding support. It's at support. Support is holding. And that's what I would expect to happen like we discussed in last stream. But that being said, it's not great that we already put in a new wick low. If we didn't put in a new wick low right here, everything would look fine. And we would be putting in a higher low. And then we would likely come back up here, put in another lower high, etc. And just keep oscillating. The fact that we wicked down, not necessarily good, but the fact that it got aggressively bought up, still okay. So from here, I have to stick to my base case, which is that oil will rally back up from this level. And this will act as temporary support. So Dow Jones, So pretty aggressive move, obviously. It came down, essentially like revisited the lows yesterday, and then closed all the way up, basically where the prior close was, just shy. And then today we gapped up above that prior close, and then we've had only bullish action since then. The way I look at this, again, we didn't put in a new low right here, which is a good sign. We went a little longer without a new low. Definitely good, because, we could have got that equivalence move as a bearish move, and we would just be at the new lows instead of back above the 8 and 21. So it's definitely a positive move. Definitely stopping the cross down of the stochastics. Knife obviously angled back to the upside. Still some bullish momentum on the daily. So, looks okay. The first step is getting above the 8 and 21, obviously, as we've been talking about for some time. What is this looking like? Still just looks like a bounce off of the 200 exponential and then a rejection off the 8. The fact that we came back down, though, and then again we see this rejection of lower prices, aggressive buying candle, definitely a good sign. 2 green histograms on the weekly now. I really would have rather seen this come down and touch the 200 simple. Don't always get my way. Usually the market looks at things the same way I do, though, and it wants that push down. We were so close to it. It seems strange that we would get that close and not get there, but, when we look back at our monthly, base case, we're doing exactly what we discussed. We basically assumed we would close at the lows, near the lows, push down, not put in a new low, and then push back up to retest the 821 cross, which is 32,400. So we're now like about 1,000 points away from our target. Still, everything looks bearish on longer time frames. But again, the daily and the weekly time frame don't look terrible. I mean, they don't look great, but they're starting to build some positive momentum. Same thing with SPY. It's rallied back up above the 8 and 21. If it closes right here, that's definitely a good sign. Being above the 8 and 21, definitely the first step. The weekly, again, came down. Bullish rejection. Don't get to the 200 simple, which, again, is not what you want to see. You want to see it come down and give you maximum confluence. And then, again, on the monthly, just trying to rally back up here and touch that. Somewhere in between 400 and 410. Still the bullish target. Nothing really has changed here. Still overall, markets look bearish. Just a little bit of short-term positive price action. I mean, the fact that we didn't put in a new low is definitely a good sign. So IXIC, Nasdaq, again, a little rally back up or a gap up above the 821. Daily starting to build a little bit of momentum. Again, looks okay. Spending an awful lot of momentum going nowhere. Weekly, we already came down to the 200 simple, so we got the move that we would like to see normally. We don't see as clear of a rejection of lower prices. Very close to a weekly cross of the stochastics coming out of the bearish control zone, which could lead to a decent rally. So again, we've been talking about it, obviously, since the quarter, half, month ended, how now is just not the time to get bearish at support after a massive move already to the downside. And I think that's more clear than ever. I say that as we just basically go sideways and do nothing. Russell on the daily, very much the same. Didn't put in a new low, which is a good sign, obviously. We were very close. We basically were 1-2 candles away from new lows. So it's good that we didn't do that. If we look at our weekly, the Russell looks much weaker below the 200 simple. We've already seen the flip between the 200 exponential and simple back and forth. And then the monthly, almost no rally back to the upside. Makes sense, as the Russell is just a bunch of zombies. So hard for them to get excited. So yeah, Russell obviously looking the weakest by sure. So on to our sectors. XLI. So we did just put in a new low just yesterday. So industrial, very weak. Very weak. I had a little move up here today, but again, extremely, extremely weak, putting in new lows. Not what you want to see from industrial. XLP. So consumer staples showing some strength. 821 still across to the upside. Beating the drum here at the 200 exponential. If we spend enough time below this moving average, just hanging out at it, the more likely we are to break up and retest the 200 simple. About to get the hard sell signal, leaving the bullish control zone. So momentum is actually like rolling over to the downside. which is what you would expect. We come back up to resistance, it acts as resistance, and then we fall back down lower, put in a new low. So XLF putting in new lows yesterday with the earnings report from a couple of the big banks. Obviously, my theory slash the facts on how banks make their money and what to expect from them has played out perfectly. They have done absolutely atrociously. They were down like 5% just yesterday. The earnings were big misses. The guidance were misses. We're already seeing everything I said play out about the revisions. So again, that's going to completely reset the valuations of all these companies. So, you know, we see an initial like 5% move down and people are like, oh, okay, that was just their earnings getting priced in. I don't think we're anywhere near pricing in what they're expecting. So, you know, we're seeing like all kinds of bearish sentiment in the markets. We're seeing a little bit of bullish move in the markets. I understand it can be confusing to people. You know, obviously it's not financial advice. I'm not your financial advisor, but you have to understand that sometimes it's not about the news or the move. Like if the market already expects, if the educated portion of the market already expects something like the financial sector to do poorly, even though regular people think banks are doing good, or like idiot influencers are like, banks are a good place to have your money because rates are rising. Sure. I mean, you sound like, to somebody that has no idea what they're talking about, makes sense, right? To somebody that knows how banks make their money, obviously they sound like a fucking moron. And now in hindsight, it's played out perfectly. And obviously we were right. Banks were the last place to be, as they've completely melted down. I mean, the only place you could have put your money that would have been worse than the banks is, I mean, what, like communication, crypto? I mean, that's pretty much it. So that being said, when we look back at it now and you say, well, that move wasn't that bad. I mean, sure, we put in new lows, but now we're well off those lows. So I guess the market didn't care. Well, the market was probably already wise to the fact that banks were going to do poorly. So the move we see initially in the first like couple days, or the reaction we see, is sort of just that initial reaction. Oftentimes it's counterintuitive because people are expecting bad. And then the news comes in and it's bad, but it's not that bad. It's not as bad as it could have been. Therefore, if they were expecting bad and then it's less bad than they were expecting, technically on the spectrum, it's actually good because it's less bad. So less bad is more good. Therefore, it's good. So you have a bounce from there. That's the mentality of the market in many cases. Also, you have to keep in mind that, you know, I know the CPI print was big and everybody's making a huge deal out of it. We spoke specifically about the CPI in advance. And I was asked, like, I think it was 2 streams ago. It was either Sunday or Friday's stream last week, I think. And I was asked specifically about the CPI. And I literally said, I just don't think it's going to make that big of a difference to the market. Everybody's waiting on the Fed. I mean, the CPI is great and everything. Gives people something to talk about. The news can report. Everybody can go, oh my God, Biden. Oh, look at the CPI. I mean, it's terrible. I'm not trying to downplay it or anything, but we know that the market honestly doesn't really give a shit about the CPI. The market really only cares about what the Fed is doing and expectations. So that being said, we got the nasty CPI. Everybody talked about it. Everybody thought, oh, the market's, you know, bottom's going to fall right out of them. And then we really haven't seen that. We haven't seen it at all, as a matter of fact. We've seen the opposite, which is exactly what I said, that we basically have, you know, that hourglass timer. And the last couple pieces of sand are falling out of it as we get close to the next Fed fund meeting. So that hourglass represents the ability of the market, or the time of the market, to basically run up. So, you know, as far as I'm concerned, right now the adults are all waiting on the big decision next week. In the meantime, you know, the kids are acting a fool. They're doing all kinds of stuff, having a little party, having some fun. But the adults are getting ready to, you know, show back up here, you know, in the next week. So, you know, what's the status going to look like of the markets when we get there? I mean, we already know for sure that any bullishness in the markets just reinforces Jay Powell and the Fed. So when they come in and say, oh, well, CPI print came out, it was terrible, the worst we've had in, you know, 30 years, whatever, absolutely horrible, you know, almost double digits. Market didn't really care. Market still looks good. So we don't have to worry about the markets. Markets are fine. So in my opinion, the more the markets rally on quote unquote bad news or just run away whenever they get the opportunity to, the better that is for the Fed and their ability to tighten. Because if the markets were just straight crashing down and, down 10%, 15%, 20% leading up to the meeting, the Fed is going to, I don't care what they say, they're going to have to be a little more cautious. If the market's rallying back up off the lows and things don't look so bad and sentiment's not that bad, it just gives the Fed even more room, to slam on the brakes. So as far as I'm concerned, this is just that hourglass scenario playing out where the markets have, the rest of this weekend, and then next week to essentially do whatever they want. And since they've been getting crushed, you could argue that a lot of the negativity is priced in until we get something new negative. So that's our next big negative event. So until that happens, it only makes sense for the markets to kind of have like a relief rally, suckers rally, dead cat bounce, whatever you want to call it. But in the end, I don't see any kind of bottoming. There's no signs of a bottom. We're not going to bottom the same, week before the Fed hikes rates another 75 basis points or 1%, especially not with, further 7,500 basis point hikes in the pipe likely, or at least priced in by the market. So that being said, all this playing out exactly like we expected. A lot of times when it's really bearish and then we talk about don't get bearish now, we're expecting a bullish move, a retest over the next month or so. People think they're stuck in that bearish mindset. And then after the majority of the move plays out, which it hasn't been that great of a move, but, in like cryptos, 20%, and some stocks, we've seen 5 to 20% rallies, etc. By the time the move is almost done playing out and everything has happened exactly like we discussed in advance, now all of a sudden people are trying to get bullish again. And it's like, whoa, wait a minute. Everybody else was bearish, and we were saying don't get bearish at support at our 200 weekly moving averages on like pretty much every asset. At the close of the quarter, the close of the half, the close of the month, we were talking about all these things about why not to get bearish right now, that we expected a bullish retest back up to our breakdown, to our resistance levels. And now here we are getting that move, and it's playing out, and now people want to get bullish. You had all the opportunity to shift before the move happened or as the move is happening. Now the majority of the move has played out. We have one more week. So I'm not saying there won't be more follow through. There won't be more upside potential. But if we know there's a clock counting down and we're getting down into the single digits left now, the danger goes up the closer we get to that date. Are we going to rally the day before? Probably not. What about the day before that? Well, maybe. What about the day before that? Well, I don't know. So what are we talking about? We're talking about the Wednesday of the week. So now we have Monday and Tuesday to do whatever, the rest of today. So we're basically running out of time. So we'll see how it all plays out. It doesn't have to play out. Maybe the Fed only hikes, 50 or 75 basis points, completely shocks the market, and then we keep running up. I think it's very, very unlikely. We don't typically see the market rallying for long periods of time or extended periods of time while we're having increasing rate hikes. So if we already had a 25, a 50, a 75, and now we were getting a 50 or another 25, there's an argument to be made that, okay, at least the rate hikes, we're still getting rate hikes. We're getting towards the Fed, target, and the acceleration of those rate hikes is slowing down, or the speed or size of those rate hikes is slowing down. Maybe the Fed's skipping a meeting. Maybe they're only doing 50 or 25 a meeting. Then we can make some kind of argument that actually makes sense. But while we're accelerating and we're going from 25 to 50, 50 to 75, 75 possibly to 100 now, regardless, maybe just another 75, which is what I still expect. The fact of the matter is they're not decelerating. Arguably it's accelerating, and now it's starting to level out. If we do two 75s in a row, at least it's not accelerating, but it's leveling out. But it's leveling out at 75, which is like some of the biggest rate hikes we've had in 20 years. So that being said, take the CPI data with a grain of salt. Like we said in advance, I thought it was going to be basically a non-event, which it was. With the exception of like quick reaction rally, up, down, up. Didn't really do anything. We ended up right back where we were. So obviously no one cares about the CPI as far as the markets are concerned, as expected. So that being said, the real thing to watch is the Fed funds rate hike we have a week left to go. I don't see any reason the markets can't continue to, act a fool leading up to it. But then the damage afterwards is going to be exponentially worse, the more the kids behave. Or misbehave, I should say. So XLRE, real estate rallying off of our take profit level, obviously just back testing resistance. Nothing really going on here. I mean, trying to build momentum, near the new lows. Didn't quite go down. Trying to get back above the 821. Real estate is just a real clusterfuck right now. XLB. So healthcare, another one of the stronger ones, still below 200 exponential and simple, but rallied all the way up to it. So obviously, like we have said a million times, consumer staples, healthcare, obviously energy, and, real estate, utilities. I mean, those are the only areas that, we should really be like deployed or deploying any capital over this last, 6-month period, essentially. As everything else has just looked absolutely atrocious. So we know those are like the safety sectors. They're hanging on for now. They still look okay. But now we're starting to see even they are closing below the 200 exponential and simple, back testing, and lightweight confirming into a bear market, assuming we don't get follow through to the upside. We could get a China situation where we move back on top of the 200 exponential and simple, start to look bullish, and then it fails. We could just get rejected where we're at and go into the bear market, or we could rally from here and confirm bull market, and that's the end of it. So XLB, materials just absolutely melting down. Definitely just looks atrocious. Still well off of the 2020 highs at some key support levels, but again, put in a new low yesterday. Not what you want to see. Obviously, industrial and materials telling us something. That manufacturing is slowing, or like industrial usage of products in general. XLY, so consumer discretionary, again, still very weak. Just hanging out at the lows, consolidating right here. Nothing much to see, honestly. As long as we're essentially in these little range-bound situations, I don't expect anything to change. So XLU, utilities, has rallied back up, back on top of the 200 exponential and simple. Back tested it, couldn't hold it, broke below it. Now back testing it back to the upside. This spent so much time at the 200 exponential and simple, essentially fighting over fair, overvalued or undervalued. It's tough to tell which direction it's going to go in, obviously. The momentum is starting to shift back to the downside. We see the stochastics rolling over, very close to getting the hard sell signal. At resistance, below resistance, obviously. Closing below here is not good, especially on like the weekly. We've had like 3 days in a row now below, trying to fight our way back up, and it's been unable to. So I have to give the wave to the bears on this one. Looks more likely it breaks down. Communication absolutely destroyed, hanging out at the lows. And when I say at the lows, it's not literally like at the low, but our lowest low was a couple weeks ago, and since then we have rallied off the bottom 3.8%, which you're like, well, 3.8%, it's not nothing. Well, I mean, sure, it's not nothing, but when we look at from the top to the absolute bottom, we were down 39%. If we look to where we're at right now, we're down 36%. So sure, it's not nothing. But at the same time, what is this in the scope of this? I mean, it's nothing. That's why I say we're at the lows. So communication obviously just looks very, very weak. Tried to build up some momentum, and again, looks to be rolling over. XLK Tech, so we see essentially just hanging out. We see a lot of these are forming essentially some form of a channel, or in this case, a triangle. Whatever we're looking at, whatever, it's like the lows right here, or like the high since the low. I basically just look at that as the range. We could come slightly up here. It would look like we're kind of breaking out of the triangle. But until we take out that recent high, it doesn't look like great. And then obviously not taking out the low, is what we're looking for on the support side. So a lot of these are trading in like a sideways channel at the bottom of the range. So while it's not terrible, because they're not going lower, arguably they're just burning time before they go lower. And we'll see this on Ethereum when we get there. Is a very, very good example of that. So XLE, energy has back tested the 200 exponential and simple, lost the 200 exponential as support, 200 simple is basically like just flat at this point in time. We did get the hard buy signal coming out of the bearish control zone, a bunch of green histograms. Seems more likely than not that energy would get a bounce from this level. We did break down below support, but it's not uncommon to see, a little overshoot to scare people out of their positions. And then we run up afterwards. Oftentimes we'll see an overshoot like this and then a back test to a higher low and then see some follow through. So that's basically what we're looking for. We want to reclaim the 200 exponential and simple, back test and put in a higher low. And then we can have some potential to run back to the upside. Now, I do think that this run will likely result in a new lower high. We may start to see some true divergence between prices in the United States versus prices in Europe. Obviously, we've seen it to some degree on nat gas. Obviously in Europe, they're paying substantially more for natural gas than we are in the United States. Obviously, we are one of the biggest nat gas and oil producers in the world. So while these are world markets and they are directly affect the price for everyone, because of like situations with nat gas and the fact that you have to actually like liquefy it before you transfer it, and then once it arrives, you have to essentially turn it back from liquid into gas. It requires like extensive, very, very expensive facilities at both your, port of departure and then arrival as well. Not to mention the ships to transport it in. And, the fact of the matter is because we have direct access to nat gas here in the United States, as long as we're shipping it overseas, there's always going to be a massive arbitrage between the prices here and the prices in Europe, while Europe is struggling to get nat gas. So that being said, while I think that we will still see run-ups in prices in energy in general, oil, nat gas, etc., coal, I still think they will do well over time. But there's going to be, in my opinion, a big divergence between those assets if you're in the United States or priced in dollars versus, in Europe in particular, or like, priced in euros or whatever your currency is. So if you're in a different country than the United States and you're looking at, or trading different charts, say like the euro nat gas prices are futures, you may look at this and see a completely different situation as we see variance between the euro and the dollar, or the pound and the dollar, or the yen and the dollar, etc., as well as we see variances in not only the actual price of nat gas in those, but also in like their relative currencies. So what I'm basically getting at is, as long as we're using, nat gas to the dollar or oil to the dollar, and then we're looking at the futures in the United States, there's always going to be a possibility for a drastic difference. If you look at that same asset, like, nat gas in euros or nat gas in futures market in Europe, we may see some big divergences. So if you're looking at other charts, say, like, for instance, nat gas in Europe on their, like, futures market, there's going to be a drastic difference. And that may not tighten up the same way. We may see natural gas in the United States kind of coming down or leveling off. We're probably not going to see that happen in Europe. So keep in mind that now because the supply chain is operating so inefficiently worldwide, there could be drastic differences and, time or opportunity to arbitrage. Trade setups, obviously. I don't think anybody's going to go get like a boat and fill it up with nat gas and, drive it across. I mean, people are, not probably anybody listening to this. But that being said, I think energy is a key area to watch, especially as we go into the winter, especially in Europe. As, maybe we'll start looking at that regularly and not just like the U.S. sectors. We'll go back to some of our international stuff. But as long as the dollar was strengthening and still very strong, as a United States citizen, there's not a lot of opportunity to invest internationally. I mean, because think about it. You might, if you're like me and you're in the United States and you say, okay, I want to invest $100 in, foreign markets. And you're like, this is great. Those foreign markets went up 20%. I would like to cash that out and then take my profits back into dollars. And you're like, that was amazing. I just made 20%. Great job. Well, now here's the problem with that. Say that exact same situation plays out, but meanwhile the dollar continues to strengthen, or the DXY continues to strengthen. And now I go, okay, I made 20% in, Brazil or whatever. So now I'm going to go ahead and cash this out back into dollars. And I'm like, oh no, while I made that 20%, the dollar actually strengthened 30% compared to, the Brazilian real or whatever currency we're looking at. Say it's even just 20%. So I made 20%, but I lost 20% on the exchange rate. So I'm back to break even. So if you're in the in the United States or use dollar denominated, assets or pay or investments, when you start looking at foreign investments, you now have to look at the actual Forex, the currency portion of it, more so than ever. Like when the dollar's going sideways and nothing's really happening, or the dollar's going down, sure, there's tons of reason to invest overseas. But when the dollar is strong and stronger than it's been in the last 20 years, going back to 2002 and breaking out, essentially going parabolic, that is just the absolute worst time to invest in foreign assets or foreign currencies, because now we have to assume that not only is the trade of the asset that we buy into going to succeed, but now somehow the dollar is going to weaken, or at least not strengthen too much that it completely ruins our trade. So there's a huge difference right now, especially if you're in the United States, for wanting or any need or idea or thought or ability to invest in foreign markets or assets. Right now is just not the time, because you're fighting the dollar strength the whole entire time. You can find the best trade setup, in some foreign country. And that trade setup could play out beautifully, and the whole setup could get completely wrecked by the dollar. So in my opinion, not a good time for Americans to be investing, foreign countries. And that's not just from a trader's aspect. I mean, I'm sure there's lots and lots and lots of other people, with businesses or doing business or important global things that are oh, now's just not the time to invest in, foreign countries. And vice versa. We also are seeing declining interest in the dollar in many countries, or, sort of a overall trend through this de-dollarization, de-globalization going on. Unfortunately, that just leads more money at the same time that everything else is going on and the world's trying to de-dollarize. It pushes more money into the United States markets because the dollar is actually strong. So it's well, the dollar's strong, so actually I want to be in the U.S. And you're like, oh, wait a minute. So their bonds pay, the best percentage, 3% instead of, 1 or 0 or negative. So that's good. And then also the dollar strengthening. So the opposite situation happens. They buy U.S. bonds for the yield. And then in the meantime, the U.S. bonds strengthen in comparison to, say, the euro. So then when they go to cash out back into euros from dollars, they get more euros because the dollar has strengthened throughout that period. So they double win. So that's what you're likely to see, is people to go to the easy trade, which is as long as the dollar is strong, you invest in the United States. And why is the dollar strong? Well, monetary policy compared to the other basket of currencies. And why are all the other countries weak? Well, monetary policy compared to, the dollar. And then also, where does it look like shit's about to hit the fan? I mean, are we going to see more places like Sri Lanka where shit hits the fan? Or are we going to see the United States? Are we going to see more places like, Germany where shit hits the fan? Or, some of the other places that are in danger, Romania, or, basically anywhere in Europe that has to worry about a potential land war? I think those places are more unstable or more likely to disappoint or just have some crazy negative moves than the United States. So that being said, it gives a strong case for why the dollar is strengthening and why the dollar will continue to strengthen. So that being said, looking at transportation, obviously down below support, just hanging out basically in between the 2020 highs and some key fib levels. doing nothing right here, using up a bunch of energy to go sideways. Looks very weak, and eventually looks like the bottom just falls out below this and goes to 60. XSD semiconductors rally back up to the neckline, trying to get back above the 821. Potential still looks good for this, like, I mean, that was a sort of ugly head and shoulders, but seems likely that this is going to try to come back up here. I don't know that they're going to rally back that high. They're using a ton of energy to basically go nowhere. I mean, when I say nowhere, they're off the lows pretty good here. 15% off the lows. But again, where are we really at? And how many of these, 15 to 25% moves do we have before we just go lower? Because if every time we get one of these 21% moves on the way down, you get suckered in and you buy, 18, 19%, 20, 21%, every time we get one of these, and then it's just followed by a larger rally to the downside. So that's why it's so important to pay attention to when we talk about the trend and we say we have a high, then we have, a low, a lower high, a lower low, a lower high, a lower low. As long as this keeps happening, no matter if you buy the absolute low or you buy the previous high, it doesn't matter because we go and then we put in a new low after that. So no matter where you bought, if you bought right here at the absolute perfect time or you bought right here at the absolute worst time, no matter where you bought, we were eventually below that again with our new low down. So as long as that continues to happen, there's no good buying opportunity. So when people are like, I'm buying the dip, you're like, okay, you're dollar cost averaging into a downtrend, which is literally the worst thing you could possibly do. I mean, for normal people that care about money and use their brains. If you are just a regular old person who spends no time looking at the markets, doesn't care about trend, never looks at a chart, doesn't understand technical analysis, and just wants to save for retirement or invest, that's fine. Dollar cost averaging is okay. That is okay for you. I would recommend dollar cost averaging. Obviously, I wouldn't recommend it, but dollar cost averaging is basically for people that are too lazy, too stupid, or just don't care, but still want to invest. That's what dollar cost averaging is for. No human being that studies technical analysis and is trying to learn it, no human being that is, putting in hours learning about technicals and fundamentals and all this type. No, they should not be dollar cost averaging into a downtrend. Ever. Because you don't know when the downtrend is going to end. And that's the most important thing. Because there's people who are buying up here saying, oh, this is just reaccumulation before we go higher. Well, they're now extremely upside down in their position. Then here, and then the push up, and it's like, oh, we reclaim those levels. They're upside down in their position. Then here, and it's just going to keep happening the whole time down. And we don't know, is this time down going to last for another month, 6 months, a year, 3 years, 5 years, 11 years? I mean, we've seen it before. We don't know. So not only do we not know how deep the price is going to go, how much more we have to lose before it rallies back up, but also we don't know how much time is going to go by. So we have a double nasty because we're wasting our money as it goes down or value as it goes down because we're just holding an asset that's losing value. And then also we don't know how long it's going to continue losing value for. So that's a double misallocation of funds. Our funds are in an asset that's depreciating. That's a misallocation of funds. And then on top of that, our funds are in an asset that's depreciating and we don't know how long it's going to be losing value for. So that's just the absolute worst case scenario. Absolute worst case scenario. Dead money. Or worse, I mean, it's in the process of dying. It's not even dead yet. It's still alive and we could save it. And it's dead. We're sacrificing it. The 210 spread. I mean, we've talked about this a ton. Obviously, nothing really changed here. We're basically just sitting at inversion. Bond market looks pretty tired. The yields anyway. So, may see that counter trend rally start to begin now. So DXY. So we hit our target to the upside. We basically locked in these two key Fibonacci levels. Now we're back testing those levels. Nothing wrong here. Obviously, very bullish in the bullish control zone. All green histograms. We're now showing a red histogram on the daily. Again, we're above support, which is bullish. We're above the 8, the 21. Both 200s are angled to the upside. So everything is still very bullish. There's no reason to just see a slight rejection candle, and then a bearish engulfing candle and say, oh my God, this is it. The trend is over. This is the top. It's done for. I just don't see it. I'm not saying I don't think we pull back from here, but I just don't see the argument for like, this is the top now. And I'm like, okay, because, and they're like, because it's already gone a lot, and the paying for the stuff and the government and bankrupts. No one can make a coherent argument as to why this is the top. So I see no reason to sit here and try to call the absolute top in the dollar when it's literally going parabolic. I mean, the speed and acceleration of the trend is almost to the point that it's straight up. So sure, do I think that the dollar tops out sometime? I definitely do. Now, is it going to be sometime this month? Is it going to be sometime this year? Is it going to be sometime this decade? I have no clue. I have absolutely no clue. But this trend has been going on for a long, long time. So it seems more likely than not it continues. So we started this trend in 2008. So anybody that's been calling for weakness in the dollar since then is wrong, because we've clearly been in an uptrend. Consistently putting in higher highs and higher lows the whole way up. So for the last, anybody here that said, oh, that's it, the dollar topped, it's going down now, in 2008, they were wrong for 14 years. And most people don't adjust. So they say, oh, look, now we're in a downtrend here. And then, oh, no, wait, higher low. And then, oh, look, higher high. So we're in an uptrend. So literally, we are in an uptrend without any doubt. Without any doubt. We literally just put in a new higher high since 2002. So there's no reason for me to think that this is all of a sudden just going to flip bearish. As a matter of fact, what we see happening right now is extremely bullish. On the weekly, the 200 exponential is about to cross over the 200 simple, which is the most bullish cross that you can have. It's the last cross that needs to happen for this chart to be 100% bullish on the weekly. And if we just go out to the monthly, again, we see the 200 exponential cross above the 200 simple back in 2017. The slope flipped over in the 200 exponential and 200 simple back in 2020. Clear uptrend. And now there's no resistance left anywhere except for, basically this little peak right here that we're looking at. So this is what we're looking at. It seems most likely that we would come up here to like 120, retest those highs, and then that would act as a failing point. Or maybe we retest the highs from the 1980s, and that acts as a failing point. But the likelihood of us just like in the middle of nowhere, just kind of topping out, and that's it, and the dollar just runs out of steam and just goes back into a bear trend, comes all the way back down to 200 exponential, doesn't find support, then the 200 simple doesn't find support, then they flip over red, and all of a sudden we invalidate this bull trend. I mean, it could happen, but there's a shitload of steps that have to happen before we get bearish on the dollar. So, I mean, we're at 107 now. You have to be below 87 before we can even start to confirm into a bear market. So we're talking about over 30 points to the downside on the dollar. It's at 108. It has to be at 87 before you can even argue that it's bearish or starting a downtrend or anything like that. So I like my odds right now. For all the people that are trying to call the top on the dollar, and I mean, I've literally heard it for years now. People trying to say the dollar has topped, the dollar has topped, the dollar has topped. And they might have been right for a little bit here, or for a little bit here, or for a little bit here, a little bit here, a little bit here, a little bit here, a little bit here. But eventually, they were wrong every single time. And that's why we trade with the trend. As long as the trend is still bullish, which it clearly is, there's no reason to try to fight the trend of the dollar. So when people are like, are you investing in foreign? No. No, I'm not. Are you betting against the dollar that it will reverse sometime in the near future? That's what people are asking you. Saying, are you betting against the dollar while it's in a parabolic uptrend that we haven't seen since 2002? And the last time we saw before that was in 1985, full on knowing that we have just broken out, but above the previous two all-time highs. And now we're back testing areas that we haven't seen in 20 years while we go absolutely parabolic, while fundamentally and technically, there's a strong case for the dollar. Are we going to try to pick the top right here in the middle of nowhere? No. Are we going to try to pick it right here? Probably not. Are we going to try to pick it right here? I don't think so. We'll see what happens when we get there. Do I expect resistance at these key levels? Sure. Took us a little bit to chew through the resistance right here. We had a breakout, a back test, and then we took off. So it took us 3 candles to get through, the 2016 resistance and the 2020 resistance, arguably. So when we get up here, does it take us 5 candles to chew through that and then we go higher? I mean, probably. but I don't want to bet against that. I don't see anything right now. There's nothing in my strategy and technical analysis or anything that says this is going to be the top. But I just have a feeling. I can't tell you why. There's no actual analysis, rhyme, or reason to why this needs to be the top. But I just have this feeling, and I trust it more than anything else. That's the stupidest fucking thing I've ever heard in my life. I have no problem with people disagreeing with me on anything. I obviously don't know everything. So whether it's technical analysis, whether it's how to spell a word, whether it's anything, I absolutely do not care. I mean, the whole foundation of like humankind and growth is founded on people learning from each other and disagreements and conversations and working through problems, finding solutions. So if you ever ask somebody and they say, oh, the dollar's going to go down, and you say, why? And they say, 'cause. That's how stupid people sound when they can't create a legitimate argument for why the dollar's going down. If you want to say, hey, we're hitting the internal retracement from the all-time high to all-time low of a 786, and this has a high probability of us topping out for at least a temporary reversal, so I'm going to play that trade on a short to medium term and look for momentum to build and, trade with the shorter term trend and see if it develops into a longer term trend that, eventually results in the macro top of the dollar. I'll be like, shit, that makes sense to me. Go for it. Whether I agree with you or not, at least you have a reasonable argument for why that's likely to play out based on fundamentals or technicals or something. The people that just say the dollar's topping and you say why, and they say 'cause. I mean, that tells you enough right there. So just be careful of all the idiots trying to call the absolute tops on things or the absolute bottom on things. It's very, very difficult for a trend that's been going on for 10 years, and any day could be the top, and there's only going to be one highest high in that whole 10-year period. So what's the likelihood of getting that right? If there's one high and one low in a 10-year period, 365 days in a year, you have 3,600 days, and you have a 1 in 3,600 chance that you're going to pick the correct day for the high and the low. What's the likelihood of that happening? It's almost zero. So why even try? Well, you don't try. I mean, a lot of people do, but obviously intelligent people do not. So Tesla just hanging out at those same levels, doing nothing, just trading in that range. We see basically a low here at 622, putting in just slightly higher lows each time. We see a high here at like 775. Just basically just a flat resistance and an ascending support. Technically a slightly bullish pattern. Not really going anywhere though. So NEO, we saw that back test on the China stocks of the 200 exponential and simple. NEO underperformed slightly. It looks like we're about to get the 821 cross. Looks like it wants to get rejected here. It's possible it crosses back up, actually hits the targets, and then gets rejected. But I think NEO is probably just going to do what some of the other bigger players do. So we talked about Baidu and how China was essentially attempting to confirm above. Obviously, our inclination was that we get rejected and go lower. But we have to respect what the charts are telling us. So if we would have consolidated here long enough and we saw the 200 exponential and simple flip, we would have to take an entry because it's telling us, hey, bull market is potentially starting right here. Could it easily fake out or fail or go down? Sure. And then we get stopped out and then we just stick to our plan. But we were very close to China confirming essentially that the bull market was back on the menu. But obviously, as we expected, we got rejected at another lower high instead. And it looks like we're just going to roll over and likely come back down, revisit the lows, and go to new lows. So, we're at 137 right now. We basically bottomed out at like 101. It seems like we just retest that level. So that's where I think Baidu's going. There's going to be a lot of people shorting off of resistance here. A lot of people. Alibaba, same thing. We're undervalued. As long as we're below the 200 exponential and simple, we return to fair value. And then the market says, nope, still not fair value. We get a rejection and sellers come in. And now again, this is already on its way down. 77 was the low before, and it just topped out at 125. Unable to reclaim the 200 exponential and simple as expected. Rejection back down here. So again, we expect it to come back down to the lows and put in new lows and just continue its march to the downside. And then obviously like fundamentals coming back in. Now China's got, Alibaba in there, or wait, no. damn, I can't remember who was it, just got in trouble. I can't remember who they just called in, and they're talking about, you know, millions of people's data leaked, like the biggest data leak in China history or whatever. So we know regulation is still a pain in their ass. So as long as there's still technical and fundamental reasons for China and tech in China to do poorly, I would expect that to continue happening. So Nvidia came down here, did not put in a new low a couple days ago, had a little move back to the upside. Again, the semiconductor space is very, very cyclical. And, you know, it looks like it's stopped out for the cycle. I know there's a lot of people trying to buy the dips now and everything. You got to understand when is the time to buy the dip and when is the time to sell the rip. And if you haven't figured it out by now, you need to go back through and look at how to identify a trend. Because this whole time up from 2019 was the time to buy the dip. And now we're in sell the rip time. So, you know, eventually, sure, we're going to bottom out. And sure, we probably won't get the absolute bottom. But we're also not going to get tricked here or here or here or here or any of the other fake lows that we put in along the way. So, same thing with AMD. Again, just a couple days off of the lows, which is great and everything. It's good that it didn't just put in a brand new low. Obviously, putting in new lows every day is not a good thing. But I don't see anything positive right now. I mean, we're building up a little bit of momentum on the daily, but it's going nowhere. This is not what happens when we're about to see like a big, strong move to the upside. Typically, you see the big, strong move as the momentum even starts to flip. And then the follow-through comes when the market is bullish. When you essentially see the flip take place and no move, no follow-through, no preemptive move, because people are always trying to get in front of the market moves. When we don't even see that happen, the likelihood of continuation, extremely unlikely. Apple came up here almost to the 200 exponential. Retesting that previous high right here. I mean, probably tops out very close here. If not where we're at literally right now, maybe at like 158 on the 200 simple. Very clearly just coming up here to confirm into a bear market before it goes lower. If we reclaim the 200 exponential and simple, start consolidating above them, then we can talk about potential higher highs. But in the meantime, just looks like a back test before we go lower. Same thing with Alphabet, Google. It's been trying to run up leading up to this. You know, we've been talking about obviously the sand in the hourglass, but you know, it's the same situation for Google, but double down. Because Google obviously has their split coming up, which we know things go up leading up to their split and then typically sell off afterwards. You know, a perfect example is Amazon. And then on top of that, we know the Fed funds rate, the Fed meeting is coming up soon, the Fed funds hike. So again, you know, basically everything is stacked against Google right now. I mean, there was a good buy here leading up to it. There was a good buy at either of these higher lows, you know, for a move back up to it. But now, you know, it's running out of time. Every time it crosses up, it fails to hold. So obviously there's a bunch of volatility right here. And now with the split about to happen and the Fed about to hike rates and then earnings coming up too on the 26th. I mean, this is just a trifecta of bad news, in my opinion. I mean, the split is likely going to see negative follow-through. Earnings is likely going to see negative follow-through. And then on top of that, we'll have the Fed hike on top of that. So you have like 3 aces in the bear's hand right now. So I don't know what the bulls are going to beat them with, but you better hope for a straight flush. Amazon. So again, we saw leading up to the split, you know, we were at all-time lows or cycle lows. And then leading up to the split, we rallied. And then the actual split itself was the absolute top. And then since then, we came down and actually put in new lows. So since then, we've rallied kind of back up. We're just hanging out in this range. But again, we're using a bunch of momentum, using a bunch of strength to go nowhere. That's not what you want to see. Because then by the time the bulls are in control and they want to actually do something, there's no gas left. So they go to hit the accelerator, nothing happens. And then the bears, you know, start laughing and drag it back to the depths. So Microsoft looking pretty weak right here. Again, still off the lows, but just barely. Hard sell signal. Completely underperforming. Twitter hanging on for dear life. Again, people are getting excited about this little pump off of the 0.5, off of the ascending support. I mean, look, let's be real, okay? Let's say, for instance, Twitter sues Elon Musk and They go before the Delaware court and they decide, best case scenario, okay, Twitter, you had a deal and Elon didn't live up to his half of the deal. So now we're going to make Elon buy your company for the $52 that he offered, et cetera, et cetera. Okay. So Twitter won. They won on everything. So then what happens? Immediately, the stock price shoots back up to $52 because there's an arbitrage there because Elon Musk is going to buy Twitter for $52 because that was the deal and the court said that Elon has to live up to the deal. Okay. So that's the best case scenario for Twitter. They win everything. Elon buys the company. Their shareholders benefit. They benefit. Game over. We win. All right. So now let's talk about, so that's the one bullish situation. Let's talk about the bearish situations. Okay, all that same stuff happens and Twitter wins and Delaware court says Elon has to buy it. And then Elon goes, well, actually, I'm a free human being and I can do whatever I want with my money and buy or not buy anything I want, anytime I want. And then the court says, well, you're in contempt because we told you have to buy Twitter. And then what happens after that? They go into a multi-year, multi-decade battle with the richest man alive to try to force him to buy. I mean, you can't. There's no provisions in any law in the United States that says, hey, when you make a deal, you have to follow through with that deal. There's nothing in the law that says that anywhere. Now, there's things in the law that say, hey, if you make a deal and you don't follow through, you could be subject to penalties or punishments. That they can do. Can they put Elon in jail? No, they're not going to put the richest man in jail for not buying Twitter. Can they charge him a few $billion fine for not buying it? Sure, they can definitely do that. But what they really can't do is they really can't force an unwilling free citizen of the United States of America to do basically anything that they don't want to do. So the best case scenario is Twitter gets its way and then Elon says, okay, I'm your bitch, so I guess I'll just do it. The worst case scenario is Elon wins in court and the whole deal just gets scrapped. But all the situations in between, the whole gray area in between, in my opinion, favors Elon. Let's say that the court says, oh, you agreed to buy it, so now you have to pay the $1 billion fee for not buying it, plus another $1 billion. And Elon's like, oh no, that's so horrible. I just had to pay $2 billion of my multiple hundreds of billions of dollars, which affects me none. Okay. And then on top of that, the deal doesn't go through. So now instead of Elon buying Twitter at $52, which is currently at $37, he saves way more billions by not buying Twitter. And then he can just say, well, I'll buy it now at 30. And they're like, oh man, should we do this again? And they're like, I mean, probably. So then what? Elon wins negotiation tactic after paying $2 billion. There's just not a lot. I mean, and that shows will have on their lawyers and people that are familiar with business law and all these pulling up examples and saying, oh, well, this is going to happen. There's a 95% probability that Twitter wins and Elon has to buy the deal and blah, blah, blah. Well, according to the market and the price of Twitter stock right now, I would say that there is a 5% chance that Elon Musk has to buy the deal. Because if there was a 95% chance that Elon Musk buys Twitter for $52, the price of Twitter's fucking stock right now would be $52 because everybody would be assuming the deal goes through. And then 1 out of every 20 people is saying, I don't know, man. I don't think this deal is going to happen. That's a 95% probability. So if there was a 95% probability, then the price would be in line with the sale price. So there's a really low probability right now. So in my opinion, Twitter is untouchable. The deal will not go through. If the deal goes through, it will be at a much lower price. If Twitter takes Elon to court, which they are technically suing him right now, no matter what happens, they can call it a win and they say Elon has to pay $52 a share now and buy Twitter, blah, 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 blah. That's still a loss, in my opinion, for Twitter because he's just going to be like, no, I'm not going to fucking buy it. We'll just keep going to court forever, or I'm not going to pay that price or whatever. So there's no situation that I can see, legitimately zero probability that I see, other than Elon just waking up on the different side of his bed and saying, you know what, fuck it, I'll buy Twitter for $52. I just feel like it. I could see that happening. That's the best case scenario for Twitter. But any other situation, I just think is bad for Twitter. So in my opinion, is Twitter worth less than 37? I mean, it probably goes to 20 if the Elon deal is not going through here. So we're very close to just breaking down from here. But the fact of the matter is, all the people are talking about how Twitter's in a huge advantage and Elon's going to have to pay all this money and he's going to be forced to buy Twitter and blah, 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 blah. I mean, it's all wrong. It doesn't make any sense. Literally makes no sense. You cannot force human beings to do things that they don't want to do in the United States. I mean, unless they're like breaking the actual law, in which case you can either fine them or imprison them according to what the law says you're allowed to do. And in no situation ever has someone been forced by law or put in jail to buy another company from someone else. You could force them to pay a ton of fees. You could force them all kinds of different stuff. You could be a pain in their ass. You can waste a ton of their money. But the fact of the matter is, we're talking about the richest man on planet Earth against Twitter, against the government, against whatever. Well, historically speaking, if we just look at the, blatant examples of when big corporations or the richest people on earth have faced up against like government rules, regulations, laws, whatever you want to call it, what's the percentage chance that the government wins versus the entity or person? I mean, it's like zero. The government never wins anything. They never win. They do the same thing every time. And Michael Saylor's a perfect example. Even when they have a clear-cut case and they're like, hey, you committed fraud, they're like, so what do we get if we put you in jail? I mean, we get a little button that says good job, a pin, a sticker. Nobody gives a shit. All they want is fucking money. They just want money. So they say, hey, sure, you did $1 billion worth of damage. How about you just pay us $100 million and we call it even Steven? That's what happens. No rich people ever go to jail. No, the richest man on earth never goes to jail. He doesn't lose court battles. Come on. This is absolute bullshit. I mean, if we were talking about just some random Joe, if you were like, hey, Twitter's suing crypto trend trader, it's going to get crazy. I wonder who wins. I'd be like, yeah, probably Twitter. But Elon Musk? Get the fuck out of here, man. People are so stupid. But anyway, that's enough talking about the Twitter ordeal. It's just been everywhere, and I've heard so much of the same bullshit where it's like Elon doesn't have a case here. He's totally going to lose. He's going to be forced. He's going to be forced. He's going to have to buy Twitter at $52. He's going to be forced. Let's see what the court rules. If they rule that, let's see what Elon does to get out of it. You don't think Elon Musk could figure out a way to not buy businesses that he doesn't want to buy, even though he already said he wants to buy them? Why doesn't he just say, oh, the funding fell through. Sorry, couldn't buy it if I wanted to. I mean, who knows? There's a strong argument that Elon never wanted to fucking buy Twitter, that he just said he wanted to buy Twitter so that he had an excuse to sell off a bunch of Tesla stock. And then once he sold off the Tesla stock and the markets kept crashing and everything, he goes, yeah, you know what, actually, there's this bot thing that I've known was happening the whole entire time. And I'm just going to actually pass on the deal. But also, I still believe in Tesla. I only sold that Tesla because I was planning on buying Twitter stock. Not because I just wanted to take, billions of dollars out of the market. It has nothing to do with that. And that if I just started selling off my Tesla stock and publicly disclosing it, it would probably look bad. Because people would be like, hey, why are you selling Tesla? And you're like, oh, it's overvalued. That doesn't work. But if you say, oh, I don't want to sell this Tesla stock. I love it so much. I love Tesla. It's my baby. But I want to buy Twitter. And then people are like, yeah, sell it. Sell that Tesla stock and buy Twitter. And then you're like, oh, that Twitter thing fell through. What's the end game? Is Elon Musk smart enough that he could figure out that in order to sell off a bunch of Tesla stock and realize massive profits, that he needs an excuse? And the excuse could be that he was going to buy another company, which he already knows there's a massive bot problem for. And then he can then get out of it after he sells off the Tesla stock without doing any fundamental damage to Tesla as a company or people's belief in his belief in Tesla. Is it possible Elon Musk could figure that out all on his own? I mean, I like to think so. I mean, he's like, a genius. So I don't know. Maybe I'm wrong. Maybe it was not some, conspiracy theory for Elon Musk to just realize gains in Tesla without destroying, value or confidence in the stock. Maybe it was all legitimate. But the fact of the matter is, at the end, he still has a bunch of money, sold off a bunch of Tesla stock, didn't hurt the name or reputation of Tesla, didn't buy Twitter, so he still has all that money. I mean, I think he made out perfectly. He made a genius move. He sold Tesla at the top, and then he avoided buying Twitter at the top. So, but anyway, let's keep going on here. Obviously you guys can share your opinions on the Tesla / Twitter situation. Meta extremely weak, hanging out at the lows at the 786. Looks like it's ready for another leg down. Jump over and chat here, and then we will talk some crypto. What's up, Parag? Good to see you. Great stuff. Thank you, my friend. Delta Homer. Oh, that's all your name. Delta Homer, 4 dweller in the Valley of the Brook. Interesting. Damn that thumbnail, bro. I don't even remember what the thumbnail was. I think I just used an old one. Saudis max bidding dollar kek. Akis says, looks like 713 did not go as I expected. Still waiting for the dump by the end of the month. Everyone like and subscribe. Yes, like and subscribe, of course. Yeah, Akis, I can't remember if that was you talking about the CPI data, but it was exactly what I expected. It was a non-event. We've seen, we saw a little push here, a little push there, but basically nobody gave a shit. Because it's like, if there wasn't a Fed meeting coming up in like a week, I think it would matter. But essentially, the fact that the Fed meeting is right around the corner, the CPI data is basically just a non-event, in my opinion. And obviously, that's how it played out. So, Parag says, can you cover CSGPW? Thanks for covering the tickers last stream as well. Yeah, we should have some time at the end. Honkiness says, great take on Elon. Yeah, I mean, I look at it as a win-win for him. I mean, that's exactly what I would have done. Because think about it the other way around. If Elon literally just sells off a bunch of Tesla and then has to disclose that publicly, it looks horrible. So it's like, why are you selling Tesla? And he's like, oh, it's gone up a lot, and I just want to realize some gains. And people are like, oh my God, Elon doesn't believe in Tesla, or he wouldn't be selling it. And it's like, well, no, I just want to be like an actual billionaire and have money to spend, not just a bunch of stock that's worth hundreds of billions. And they're like, no, he doesn't believe in Tesla. Tesla's going to zero. I mean, that's terrible. So he can't do that. So what's he do? He says, oh, I'm going to buy Twitter. And then it's like, or am I? I don't know. But now I have a legitimate reason to sell Tesla stock. And then it falls through. The whole time he knew that there was a bot situation. So people are like, well, he knew there was a bot situation, so he can't use that as an excuse. He forfeited doing due diligence. Sure. Or maybe it was just all part of his plan. I mean, I don't know. The guy's pretty smart. So he's got a lot of resources. I mean, he was able to sell Tesla at the exact 1.618 Fibonacci extension. So he's smarter than most people because they wouldn't even know what that is. So looking at our crypto charts, so we have Bitcoin futures. Obviously, we'll be closing today in about 5 hours. We have gotten above the 8, which is definitely a good sign. After we get above the 8, we expect a retest of the 21. We did already get a single retest of the 21. Definitely a possibility, obviously, that we retest it again. We do have to be very, very careful of this exact situation playing out. We had an initial retest. We broke down below it. We had a second retest and then eventually fell out of bed. Also, the signature on the chart looks exactly the same. We have a bunch of green histograms. We come over the slope line, and then it rolls over at the dump. Here we have a bunch of green histograms. We're over the slope line. Now, we don't know if it's going to roll over yet, but again, we're very close to putting in that same signature. If we come back up to 21.7, and then it decides to top out and roll over, likelihood is then we get that move down to like somewhere between 12 and 16K. Also have, very similar situation here. Hard buy. Stoch's just trend up for quite a while. And then we get this spike in the knife, which was a very clear indication, hey, something's not right here. So we see that spike in the knife on this little pathetic push up right here. And that's the actual top. So the knife is basically telling us, hey, get the hell out. We see bearish divergence between these 2 points on price action of the knife. and then eventually it just dumps. And keep in mind, the knife is one of the few leading indicators in existence. So it actually tells you what's about to happen before it happens, as where everything else, with the exception of like a handful of indicators or oscillators, are leading. Everything else is lagging. So that being said, the knife can tell us if something is going to happen before it happens, which obviously it did. So now we see that same signature. Hard buy signal right here, hard buy signal right here. Stoch's trending to the upside. They get all the way up to like the 66 level. So where are we at right now? Again, trending to the upside. We're not quite up to that 66 level, but we're getting pretty close. And in the meantime, what's happening? Well, the price action is going sideways. Retest to 21, gets rejected. Retest to 21, and then dumps. So we're going sideways. Retest to 21, it gets rejected. Retest to 21, and then it dumps. I mean, I don't know. I don't know what's going to happen, but it seems very, very likely that we could literally just get the same situation again. Now, we could just shoot to the upside. The weekly Bitcoin futures chart, as we discussed here, basically, since our close below 200 exponential, since our close below 200 simple, we basically got the pushback up, the retest. It got rejected. We then came, basically gapped down slightly, came all the way back down to the lows, and now we're trying to rally back up. In my opinion, as long as we're under the 200 simple, that's our main resistance. I don't foresee us getting above 22.6 or the 200 exponential at 23.895. I don't think we're going to be able to get above those levels until we come up to them and start closing weekly candles above those levels. We're still in the bearish control zone. We have 2 green histograms. So a back test seems possible, but it doesn't seem likely that we're just going to all of a sudden be bullish. And we know for a fact, as long as we're below the 200 exponential and simple, we shouldn't be bullish. We should be bearish. Technically, still have a bullish slope on the 200 simple, but not what we want to see. Not what we want to see. Now, we probably are getting close to a temporary low just because we're seeing exhaustion in the indicator oscillators. I mean, they can only go so low for so long. And then looking at the monthly, obviously, so the monthly did exactly what we said, completely wiped out that single monthly candle all the way from 30K to 20K. Finding some temporary support for now, but we're now halfway through the month, and this is our bearish monthly candle for last month. This is our bullish monthly candle for this month. So, I mean, to even be slightly bullish at all, I need to see half of that bearish candle get wiped out by bullishness this month. So even just a close at like 24,000 would be fine. And that would actually look really good on like the weekly. It would look good on the daily. It would look good in a lot of places. So that's what we need to see, is basically like a 20% pump in Bitcoin, in the next 2 weeks. Now, if I'm right about the stock market and the, new rate hikes and everything coming next week, is Bitcoin going to be able to rally up to 24K and like hold above those levels after the rate hikes and everything? No, probably not. Bitcoin is probably going to be putting in new lows very, very soon with the rest of the markets. But again, that's my opinion. So, that can definitely change. I can definitely be wrong. And, the most important part of our strategy, obviously is preserving capital, but, being able to make money when you're wrong. So I can be right about things and not make money. I can be wrong about things and still make money. It's all gravy. But the most important thing is, recognize what's technical analysis and what's your opinion. Be able to separate those things if necessary. So looking at our Bitstamp chart. So let's look at our short term. Just going into the weekend, because we could see a little more price action like pops in crypto. This is what I'm looking at on the 4-hour chart. Very important stuff taking place here. So let's look at our last low and look for the similarities. So this was our sell-off right here. We go sideways. We see the 821 crossing up and down. Very unreliable, just doing nothing. We see the trend using up all of its energy, all the blue slope, as it basically goes sideways. And then it starts getting choppy through here. So the blue slope is supposed to be the uptrend. And instead, what happens? We basically go sideways. So that's a bearish reset. We get a retest of a 200 exponential and simple. We come back down. We get a second retest of the 200 exponential and simple. And then an immediate retest after that. And then that fails. We see the 821 cross back down. We see consistent closes below the 200 exponential and simple. And then that's when we start to just let go. Begin the trend to the downside. So now here we see We used up a bunch of the blue slope line going sideways. We used up a bunch of the blue slope line again going sideways. We see the oscillation between, bullish and bearish. We see the initial attempt to retest fall slightly short. Here we get the retest. Seems very likely we get the retest of the 200 simple as well. Exponential as well. Which is 21,856. So we'll see what happens. We will see what happens. It seems likely, this looks like this right here, where we initially kind of touch, and then here we burst through the 200 simple and touch the 200 exponential clearly. We actually get like that double touch. So seems likely we could hit 22K. Looks like it's ready to roll over. Obviously in the bullish control zone. Trying to build up some strength, but it's just not really believable for me, at least. When we go to the daily, we're basically just range bound. We have a strong support here at the bottom off that initial close at 18,900. We have strong resistance off of these closes up here at like 21,658. We still haven't closed the daily 821 bullish. If and when we get that bullish close, which again, we look a lot like this where we're attempting to and it fails. If we get that bullish close, sure, it's going to look good. But now it's probably going to happen over the weekend if we get some bullish momentum, which means it's not going to get. Anytime we see a move over the weekend, it looks great at the time. But then when we look at the futures chart, it doesn't reflect in the futures chart, because usually what happens is whatever the move was over the weekend, by Sunday, futures open, it's back to where it started. So the move isn't sticky. It doesn't hold. It's like a move, but it doesn't count for anything. So it doesn't affect the futures chart. So now look how close we are to closing. Crossing 821 on the futures chart. We're not even close at all. Here, look how close we got. Fairly close, but not nearly as close as on the spot market. Here, the spot market, it's like, oh yeah, we're about to cross it. But we don't trust spot. We trust futures, because that's where all the adults are. I like to see both of them. I like for them to agree, but we know that the futures is really what controls the markets. Because the spot market is a bunch of cultist people, like, Bitcoin believers and stuff like that. Like, the futures market is people that just want to make money and don't give a shit about the asset. And that's where you're going to get an accurate representation. I mean, if I tell you I love Bitcoin and then I give you Bitcoin technical analysis, you're probably going to be like, well, of course, your Bitcoin technical analysis is good because you love Bitcoin. So you'll naturally have like a bullish bias to it. That's the spot market. The futures market doesn't give a shit. Futures market just cares about money. So that's why I trust the futures market, or believe the futures market, much more reliably. So we see what's happening right now is, even though we're close to confirming this cross on the daily, it's probably going to happen on spot market over the weekend. Not going to happen on futures market, and then just going to roll over like it did last time. That's what I would guess. I mean, based on just what's been happening. So here we see the hard sell signal on the spot market. Last time we got the hard sell signal was right before we melted down. We could easily see this cross back up bullish again and invalidate it. We don't have to believe that it just dumps from here. But again, here we get the hard sell signal right before we sell off. Here we get the hard sell signal right before we sell off. And now here we have the hard sell signals, well, right before we sell off. Now, what does this look like? What are the options? Let's say this hard sell signal is right and we're about to sell off. Is it possible that we chop around for like 7 days before this happens? And then we sell off? So we go sideways, it looks bullish, it moves up, we get kind of the cross happens, and then it sells off? It's definitely possible. And I mean, that's probably my base case scenario. Lining everything up with the Fed meeting. So I would just be real careful in these markets right now. I think they're lulling people to sleep with a false sense of security. Looking at the weekly, very, very weak. 200 exponential has already rolled over. 200 simple looks pretty weak. We're still below it. We've got to get above 22.6 basically. Just looks atrocious still, in my opinion. And then, again, the monthly chart, absolutely horrible. 821 have crossed the downside. Very bearish. Very close to entering into the bearish control zone. We can see what this month has looked like. Again, this was a month worth of down price action. This has been, half of the month worth of price action. So nothing has happened. We're still very, very far away from trying to like rally back up and, you know, invalidate the bearish candle, or at least like reclaim some of it. All right, so Ethereum, talked about Ethereum a little bit earlier, and I was talking about how essentially we're in this like channel, and Ethereum's is like crystal clear. I mean, anybody can look at this and see, you know, we have a clear support at the bottom, give or take a couple bucks, and then we have a clear resistance here at the top, you know, give or take a couple bucks. So as long as we're trading in between these two levels, which is, you know, roughly 1,000 and 1250, I would just expect that to happen. I would just expect us to keep trading between 1,000 and 1250. So we're at 1250 right now, or very close to it, getting the hard sell signal. I would fully expect this to just sell back off and come back down to 1,000. And then when it gets to 1,000, I would fully expect it to bounce and then come back up to 1250 and blah, 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 blah. Over and over again. Just looks the same. Again, we're looking slightly more bullish than it did back here. At least it was attempting to get back above key fib levels. Here, when we had that sell-off, it couldn't even get, or I'm sorry, key moving averages, couldn't even get back above the 21. Here, we at least got back above the 21 slightly. We see the bullish divergence basically attempted to play out right here. Nothing happened. It's just going sideways. Bunch of momentum, just going sideways. Not what you want to see. I mean, again, this looks a lot like, you know, and I hate to just say the same thing over and over again, but it looks like a bearish reset. You know, when the price action just goes sideways and the oscillators trend up, it just looks like we're getting ready for another big move down. Doesn't have to happen. Just because it happened last time doesn't have to happen again. Looking at Ethereum, we're just sitting on the 382 fib level. We're just sitting there. The longer we sit at support, the more likely we are to break through it. We know that the support is the fib level. We know the resistance is the 200 simple moving average on the weekly. So we're basically just oscillating between those two. So we're above support, we're below resistance, and we're bouncing off both of them. So we're going to get a violent move. We don't know which direction it's going to be in. If it's to the upside, it's probably going to be the 200 exponential. So 1610, a nice move to the upside. If it's to the downside, you know, which obviously our 236 is slightly above, and that's where our target is, slightly above as well. So we could come up as high as 1863. A move to the downside probably takes us down to the 0.5, which is 640. So, I mean, arguably right now, you have 50% downside, 50% upside. So it's basically a coin toss from where we're at right now. We don't know what's going to happen. Obviously, Ethereum trying to build some kind of strength. People are trying to call for crypto bottoms and begging and praying and wishing for crypto bottoms. But honestly, I mean, it just feels like the whole market is standing on a piece of wet toilet paper above a shark tank. Okay, and it's just a matter of time before the wet toilet paper breaks and we fall through it and we land in the shark pit. So Bitcoin dominance, just hanging out at that same level. We need to see how this closes. Obviously, a close back above 44 will look good. A close right here is just whatever. We don't want to break this ascending support line. Losing this descending resistance line obviously was a big deal. We'll see. I mean, my base case was that this breaks out off of triple bullish divergence and then moves to the upside after a retest, a back test. We got the back test and it didn't hold. So maybe I'm wrong and we're going to go back down here and alts are going to run. I don't know how alts run if we're going down. I don't know how alts gain value compared to Bitcoin if we go down. So it's very difficult for me to understand or build a case right now for an altcoin rally compared to Bitcoin. I just don't see it happening. I don't see Bitcoin breaking out and then alts breaking out as well on anything more than, like, at this point in time, like a week worth of price action. So maybe we have like a big breakdown here over the next week. And like all next week, it's like a big red candle and alts just pump while Bitcoin pumps, but not as much. It's possible. It just seems much more likely what's going to happen is, you know, crypto, alt, whatever, everything's just going to kind of run and do its thing, move around a little bit, kind of go sideways, whatever. This all just kind of chops around here. And then we get to that Fed funds meeting. They hike 75 basis points or 100 basis points. The market, you know, maybe rallies a little bit right afterwards and then just straight up pukes like it does every time. And then that's our big, Bitcoin goes down, but alts go down much faster. I don't know. This is a weird situation because every time we see a big sell-off, people rush back in to buy the alts. And the truth is, until the psychology changes in the markets, as long as people are rushing back in to buy the alts, we're nowhere near the bottom. We're nowhere near the bottom. Because you'll hear, like in tech, people are talking about, Apple, Microsoft, Amazon, Google, Tesla. You tend to concentrate towards big names, not diversify into crap names. Like, it's the opposite. When we're in a bull run and everything's going up, you start getting further and further out the risk curve, buying shittier and shittier cryptos or more garbage and garbage companies that don't make money, or, just like a hope and a dream. When things are going bad, or the economy's tightening, or financial conditions are tightening, or, money is being more valuable because it's harder to get, essentially, which is what's happening right now. There's less money floating around. Therefore, that money is more valuable because it's harder for everybody to get a piece of it because there's less and still the same amount of companies or people that want that capital. So what happens is people pull back and concentrate into stronger stocks or more fundamentally or technically strong assets. They don't diversify and buy the dip on all the trash every time we go down. And that's the problem that's happening in crypto. Now, it happened a little bit in the stock market as we've seen, record inflows into Cathie Wood's funds as they get wiped out 70%. Sure, you're going to see some of that. And that honestly is just shows you how stupid retail is. They're constantly thinking, okay, sure, she was right before I ever heard of her. And on paper, she sells herself really good. She has a great marketing campaign. Therefore, I believe in her in the future. Even though everything I've seen is her lose 70+% of people's money, and there's still record inflows. That is not going to end while the bear market is not going to end while that is still the mentality. The world does not work like that. Markets do not work like that because that's easy money for market makers to take. So that being said, crypto is a lot like that. Bitcoin is essentially, your Microsofts or your Googles or your Amazons or whatever the big tech names are. And all these shit coins. Now, again, I'm not saying every one of them sucks. Like, I'm definitely mean to them, but, Ethereum probably doesn't go away. Like, does it become the huge success it's supposed to be? Or does it just kind of stay where it's at? I don't know. I don't know that much. But it probably doesn't go away. XRP, is it a failure? Is it complete trash? Yeah. But it's also got a lot of cult members, so it probably doesn't go away. It's been in the top 10 cryptos for a while. It probably doesn't go away. Is there other cryptos that are decent that don't go away, or other cryptos that I don't even know about, or I might have been mean to, that one day change the whole world? Sure, I definitely think there is. But the problem is not those 10 or 20 or 50 cryptos. That's not the problem. The problem is the 2,000 cryptos that are total trash that everybody keeps trying to buy the dip on. Those have to go to zero. Those have to do one coin type situations. Not even zero. They just have to go really, really close to zero. Because they have to destroy the dumbass people's capital. And all that is, it's not some big conspiracy theory or anything like that. It's literally just like sitting down at a World Series of poker table with the best poker players in the world, and you're fucking Forrest Gump, or you're, whoever, just average Joe. You're going to get your ass handed to you. You're going to get everything taken from you. And that's what happens when you speculate on these trash assets in a bear market is every time you buy the dip, there's somebody else in there saying, oh, all in? Okay, yeah, I'll take all that. So that's why I'm so bearish on the crypto scenario as long as everybody is still just buying all these trash coins. I honestly don't give a shit about anything else. If you tell me, hey, every time the market sells off, what does Bitcoin dominance look like? I can probably tell you what the future looks like for crypto, just with the Bitcoin dominance chart. If we keep seeing Bitcoin lose dominance through the bear market, crypto is probably doomed. If we see crypto, selling off and Bitcoin gaining back dominance and some of these trash coins imploding and going away and some of the scamminess coming out of crypto, sure, maybe we could put in a bottom, but it just doesn't seem likely anytime soon. And the fact is, and I'm sure some of you guys are just as guilty of it as anyone. Sure, we have a 20% sell-off in the market, and then you jump back into one of these trash coins, and we see an immediate 20% pump. It's like, that's easy money, right? It is, right up until it doesn't work anymore. And that's my point is, it's like the crypto market has gone down 60+%, but the people still don't acknowledge that, it's over. They're still trying to buy the dip. And as long as people are still trying to buy the dip, we won't bottom. And I guess that's really what I'm getting at. So we'll just keep going from there. So Bitcoin weekly, crypto market cap, just hanging out at the 200 simple, still finding support, 2 green histograms, bearish control zone. Again, it seems likely that it wants to come back up and test that 1.06 trillion. So Avalanche has done nothing, just hanging out at this level. It's got all the opportunity in the world. 821 trying to cross back to the upside. As long as it's below 236, it looks rough. It's got a 45% potential move up to $28 if it decides it wants to run. And we'll see a couple of the shit coins have taken off and the trade setups have played out. Quite a few more have done absolutely nothing. Why is that? Well, because there's still all this money spread out between 2,000 cryptos. And I just make that number up. I don't know. There's probably 20,000 now. But as long as you have a limited amount of money or resources spread between a ton of assets, it's hard to get those assets to pump. But when one starts to perform, people will chase that single asset. So we'll see one crypto will pop off and have that beautiful move. 6 other ones will do nothing. So Solana is next. Again, doing absolutely nothing. Trying to cross 821 back to the upside. Just absolutely nothing happening with Solana. Polkadot, very, very weak. Still just having difficulty with that descending resistance. Again, trying to build momentum. Nothing happening. Just putting in lower lows. Basic attention token lost 821 flip right here. So, no longer can look for that upside target as long as we are crossed back to the downside. Chainlink, absolute trash, just getting destroyed by this descending wedge right here. Again, just putting in lower lows or at least retesting the lower lows. Anything that's putting in lower lows or retesting those lows is doing much worse because we see this as having consistently lower lows since that big dump. Bitcoin is at least putting in consistently higher lows since that last dump. So that's our difference is this thing is continuing to melt down while Bitcoin strengthens. And then we see something like Matic had a decent little push to the upside with the 821 cross. Basically came back down to retest it. Still looks okay. If we close above that 618, that's what we were talking about. Essentially, that's like the strong resistance. So getting a close above 70 cents is good because it probably runs up to like a buck, maybe $1.21. But it really needs a daily close above 70 cents before we can get bullish on it. I mean, we talked about the, buying a momentum trade. Obviously, you can't do that anymore. You had to do that ahead of time. So gold, very, very weak, down at 1,700. I know they said it could never happen. Gold was never supposed to go to 1,700. Blah, 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 blah. I mean, nailed it again. So 1680, 1685 is the area we've been calling for. Looks very, very likely that is where we're headed. I mean, we're just off of it right now. So, literally $100 away. Not even. I mean, 1675, let's say. So we're about $30 away, 29. I mean, how likely is it that we hit that area? I mean, it seems very, very likely. And it's acted as support a bunch of times. We can now officially say that any hope of this cup and handle playing out is gone now, because you cannot come down here and you cannot retrace the entire cup with the handle. Now we could call it a double bottom or something like that, and there's surely we could find like an Adam and Eve pattern or something. Maybe that it rounds out right here, and then we see like a V bottom and then a V out of it, or like a channel down and then a V out of it, and then it looks like an Adam and Eve bottom or something. Sure, there's tons of stuff we can do like later on when we look at it. But right now, we cannot, hope, assume, call for this to be a cup and handle. So we saw the rounding shape of the cup. We saw the descending channel that starts the handle. but it failed to break out right here. That was the big defining moment for gold. And then once we failed to break out from here, which we expected, obviously, once it failed, obviously we just come back down, swoop the lows. And then the truth is, at this point in time, we're retesting these lows for arguably the 4th time. It seems very likely that we're going much, much lower on gold. And when we look at the weekly and monthly chart, it makes perfect sense, honestly. So silver got down into the, it's still in the 18s. I was going to say it got down to the 18s, but nope, it's still there. So again, as expected, silver completely melting down. We do see that the measure move of the channel breakdown has all been hit at this point in time. So arguably, we literally hit our target to the T. Keep in mind, this has obviously been up here for months, as we didn't know when we were going to break out of this channel. We didn't know in which direction we were going to break out of the channel. But we knew if we got that break to the downside, this is where it was going to take us. And that's exactly where it took us to, 18. So we still have that fib slightly lower at like 1750. I mean, I'm not going to sit here and argue over $1. I mean, the fact of the matter is now, this chart looks horrendous. Gold is still hanging out at the bottom of its channel. Silver has already broken down, back tested, and then melted down. This is very bad. Silver looks very, very bad. And you could argue that silver is a monetary metal, and then it has blah, 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 and jewelry and coins and whatever. The real use for silver is industrial. So if obviously we're seeing, let's be real, commodity super cycle may still be in process, but commodities are melting down right now. We're seeing 20, 30+% dumps in a matter of weeks in commodities, as expected. Again, we took advantage of this the whole way up, and then we got the fuck out of the way on energy, on commodities, on all this stuff. And that's the way to do it. We don't have to catch the tip of every single move or the bottom of every single move. We just have to catch most of it and then get the fuck out of the way. And sometimes the best thing to do is sit on your hands. We see silver is completely melting down right now, as expected. And keep in mind, there's a whole cult of people that are hardcore believers in silver that only started being hardcore believers in silver at like $22, $25, $30. So there's a whole cult of people right now that have lost half their money since they got into silver, or almost half their money. Absolutely pathetic. Pathetic. The poor silverback gorillas. Actually, I don't even feel bad for them. It's probably better for the world if the Reddit silverbacks go extinct. It really is. Real gorillas, obviously we don't want them to go extinct, but faux silver gorillas, sorry about your luck. Realistically, like that 1750 is a target. I don't know. Does it even matter at this point in time? If it goes lower, who cares? I don't care. If it goes to 17, do we care? If it goes to 16, do we care? 15, 14? Nothing really matters right now. This silver chart looks like terrible to me. This is like one of the worst charts ever. Look at this thing. We have a top in 1979, 1980. And then 2011, we have a double top. This was silver's big chance to couldn't even get above 30 to come back up to retest 50. And now not only is it not breaking to the upside, it's breaking to the downside. Absolutely horrendous. It looks terrible. There's still a possibility for this giant macro cup and handle. And the difference being why that short-term cup and handle was invalidated is this one, we go all the way from top to bottom or bottom to top, depending on how you look at it. When we come back down, we only come back down to like the 50% level. Even the 618 would have been okay. But we can't have a cup that goes all the way up, puts in a double top, and then comes back down, or gold, was what I was talking about, and then comes all the way back down to the bottom. That's just a range now, because we have basically, a top range and a bottom range, and we're just trading within that range. So we'll see what happens long term with silver, but this just looks atrocious. And if we start looking at the weekly and we compare silver and gold, it's like, well, of course, what do you expect to happen? It's just doing the same thing it did last time, right? Breaks down, goes into a bear market. So we'll see. Again, I'm not trying to be mean to silver. I know a lot of people believe in silver, but you know, it has like the worst chart ever. Gold silver ratio continuing to confirm into a bull market above the 200 exponential and simple. 200 exponential is still below, but you know, essentially we could be looking at a period of time now where, you know, gold is gaining value compared to silver for, you know, 7 to 10 years. I mean, I don't know if that's going to happen. Maybe it does, maybe it doesn't, but there's definitely a possibility for it. So buying the dip on silver, better than buying the high. So pot stocks saw a little bit of a rally, pretty pathetic, trying to cross the 821 back to the upside. ACB is still very weak. Tilray, nice little pop to the upside. That's why it's so important to take profits when these things do move, because they just give it right back. Really need an 821 cross back to the upside on these things to start looking good. CGC back at the lows. Again, very, very weak. Onto uranium. So CCJ holding that ascending support for now. Holding that bottom for now. Obviously want to see this continue holding. Below the 200 exponential is simple. Essentially confirming into a bear market and below key fib levels. Looks like we're going down from here. Trying to build some momentum. Uranium stocks are really, really trying to hold on. I think that's a lot of like uneducated people just trying to buy the dip, honestly. URA, same thing, just hanging on to those key levels, very clearly in a bear market. Indicator oscillators are trending up while price action trends down. Not good. FNF Group, Fidelity, National Financial, just operating inside this channel, continuing to just sell off. Seems likely it ends up back down here at like 30 bucks. Everything's rolling over. Looks very weak. RE Real Estate technically broke above that resistance, holding on for now. As long as it's above the 200 exponential and simple, seems likely it sees further upside. But it's pretty much at like the topping area, so I'd be very careful here. ARTNA, Artisan Resource Corporation, at highs. Expect this to just continue putting in highs. Looks very toppy here on the daily though. So I'd be very careful if it does lose this level at like 50 bucks. Anything below 50, it starts looking like danger zone. For at least a temporary pullback. Probably continues higher. Ayala Pharmaceuticals, ticker AYLA. I mean, we talked about some key levels. It's at some key fib levels now. I mean, you're trying to just catch a knife on this thing. Probably goes to zero. Akerna Corporation. Again, we identified some fib extensions and everything. Talked about the potential for this being the bottom. The problem with these things is that, sure, if they rally back up to like a key level, they could have massive gains. But, I mean, you don't know when the next like 50% haircut is coming. A lot of these are just super speculative. I don't even know what they are. VXTRX, Voxtur Analytics Corp. In the process of a meltdown, obviously lost that 382 level. We talked about target to the 0.5, so it seems likely it's going to 30 cents. I mean, it's already halfway there now. ORRCF, again, we talked about where this could potentially be the low at the 0.5 round here. Seems likely, this is on the monthly chart. Let me flip back over to shorter term. Seems likely that it's trying to at least carve out a bottom right here. You obviously would rather see it off of a specific fib level, like 39 cents. I don't know if we're going to get that lucky. It's trying to rally up right now. I don't know. We really got to wait until it starts carving out a base, leaves the bearish control zone, starts to build a little momentum, and then we start looking for like that potential scalp back up to like 113. The question is, are you going to scalp it from 1 to 113 from 53, or are you going to scalp it to 113 from 40? CVC USD, just operating inside this descending wedge. Towards the top of the wedge, can't get above the 821. If it breaks out, when it breaks out, it has a decent little measure move, but realistically, probably just a back test of 20 cents, which is like 50% move. But I mean, does it break out right now? Does it continue melting down and then eventually break out from 12 cents? Does it break down instead? I don't know. It doesn't look great though. No cryptos looking great right now. Couple look okay, but none look great. But I mean, they look better than they did a week ago. But the real question is, what are they going to look like a week from now? So go back through here real quick. So Honkiness says, great take on Elon. So Hill says Elon did his TA. He 100% did his TA. If there's time, can we take a quick look at SLDB? So hang on a second. What was the other one? CSGP. CSGP, Costar Group. And then what was the other one? SLDB. Solid Bioscience Inc. is the other one. What do you think about Bitcoin Rainbow Price Chart Indicator? I mean, Delta, I have seen a lot of people show off that Bitcoin Rainbow Price Chart Indicator, and I don't think from literally when it was like first drawn, I don't think it's ever actually done anything functional. I drew one up in the trade group that was different, and it actually makes sense and is like useful. So my I guess like view of the rainbow is that it's drawn completely wrong. It uses the lows of all like the previous bear markets, and then uses the highs of all the previous bull markets, and then for some reason doesn't touch the high of this year's bull market or this current bull market. So it's drawn wrong, in my opinion. Again, we redrew it in the trade group, or I redrew it in the trade group, and it looks phenomenal. It makes complete sense. It perfectly touches like the tops and the bottoms and everything. But every other iteration of it that I've seen drawn is drawn incorrect, because it shows us going much, much higher this bull run. And obviously the 4-year cycle is over. I mean, you can't argue against that at this point in time. And we topped out perfectly at the 4-year cycle. So I think it's the same thing as like the all the other stuff, like the whole plan B like argument and all that stuff. And those charts didn't ever exist to where they were useful to people. You could never trade and make money off them. And now that they do exist, they have failed to, predict tops or bottoms or anything like that. So what is the point of anything if you can't use it to make money off of? It makes no sense to me. It's not useful. That's my biggest thing is, sure, it's fun to look at. Sure, it's fun to fantasize about Bitcoin's next run up or whatever, but it doesn't provide any actual usefulness. If I can't trade off of it or invest off of it, it's useless. If the whole point of the chart is to just say, hey, no matter what happens, if you just like buy and hold for 4 years, you'll make money. Anyone can do that. You don't even need a chart for that. You can just buy and hold for 4 years then. I mean, if that's true, which it has been in the past, we don't know it's going to be true this time, but that chart is trash to me. I've never seen one drawn correctly, and I've never seen it be like actually useful. Again, I shared the one that I drew on here one time on live stream, and a bunch of people were like, oh shit, that actually makes perfect sense. Oh, look, it called the top perfectly. And it's like, yeah, because it's drawn correctly. So I guess my argument is like any chart can be useless if it doesn't provide any value, and any chart can, be good if it helps you to make money off of it. But there's lots of charts you can draw that look good, but provide no value. And I would say that's like the stock to flow chart. Before it existed, it was useless because it didn't exist. And then after it existed, it's only ever failed. So when you look back at the stock to flow chart and you go, oh, look, it worked every other time, but now it doesn't work. So who the fuck cares? Because where was it before? Why didn't somebody draw it before when it was useful? It's hindsight TA. When I like go back and draw something and you're like, oh, that's awesome, but it already happened in the past. What use is that to you? None, unless you can use the knowledge from that to then make money in the future. So I guess my biggest argument is with is useless charts. Like I can draw like a million things that look cool and are pretty and colorful and exciting. I can show you how Bitcoin's going to make it to, $1 million, or, how pot stocks are going to get up to Tilray is going to be $1,000 and we're all going to 200x and all this. I can draw a bunch of cool charts that are fun and exciting and, probably would get a ton of clicks and get people excited and whatever. But you going to be able to make any actual money off them? Are they actually going to be useful in the future? I mean, probably not. Probably not. I mean, it's the same as the silver chart. Silver's got a giant cup and handle pattern, and the target for the breakout from the silver cup and handle is $90 to $250. And you're like, oh, so silver's going to $90 to $250, and you believe in that technical analysis. Well, I mean, you'd be a moron not to buy silver, right? But then you look at that chart and you're like, okay, but also, the chart goes back to the 1980s and then 2011 and then to present. So is it going to take another 40 years to play out? Is it useful then? I mean, if you show me a chart and say, hey, this is going to $250 in 40 years, and I'm like, okay, what's it going to do in the meantime? And you're like, yeah, I don't know. It could lose 50% of its value. It might go up to $50. I really don't know. But 40 years from now, that's not really that useful to me, because 40-year time horizon is I'll be dead probably. So anyway, I mean, it's fun to draw things in hindsight. Hindsight TA is fun to do. It's fun to look at, but it provides very, very little value unless you can translate that into what's going to happen into the future. And that is the Bitcoin rainbow chart. So SLDB, Solid Biosciences Inc. I mean, it's just completely melting down, obviously. I mean, it looks absolutely atrocious. If we take from this swing right here to this swing right here, we can maybe get a fib extension target, 1.618. I went slightly below it, wicked down a little bit. Trying to reclaim it right now. Looks like it wants to backtest up to a buck. Now, does that happen? I mean, I don't know. It probably goes to zero. But it looks like it wants to backtest a buck. I mean, you could legitimately see this thing backtesting a $1.92 before going lower. I mean, look at the behavior of what this has done. Okay, obviously, here everything's gravy, and then just melts down completely, puts in a new high, comes back down, puts in a new low, another lower high, comes down here. We finally see a swing low in effect right here. So now we have a low, then we have a high, then we have a lower low, then we have a lower high, then we have a lower low again. Then here we put in another lower high. And what is this lower high? Once we put in this low, we backtest the previous level of support. So if this was our key support, and then this was our backtest of support, we lose it, we break back above it, we completely lose it, we backtest it, and then we go lower. So can we look for a similarity at what happened right here to where we put in our next low? Well, if we go from the low right here to the low right there, this is our 1.618, and then we slightly overshot it because we actually went slightly lower. This was actually the low. So we overshot the 1.618 of the previous move, and then we rallied all the way back up to what was support, and that acted as resistance. So if here we overshot the previous 1.618 move slightly, we did the exact same thing. So arguably, the move back up would be a back test of the previous low or support, which is roughly $2. So, is it going to go there? No, it's probably going to go to zero because it has the word biosciences in its name. So I'm sure it's probably just bleeding money ridiculously fast with no hopes of ever actually creating a functional product or anything. So that being said, if we close back below 54 cents, you got to get the hell out of this thing. 22% down. But if we get the move to the upside and the back test, the same thing it did last time, you're talking about 174% up. So 22% risk, 174% reward, 7.8 to 1 risk reward ratio. So, I mean, you could be wrong. And then arguably, you could look at the 1.382 and the 8, which is probably the more likely move that you get. potentially 38% upside, 22% downside. So it's 1.73 risk reward counter trend. I mean, it's brutal. So you pretty much, the only way you can be excited about this or take a position in this is a trade setup like this. And it's pretty brutal. But, you know, this thing probably just melts down to zero. But historically, it likely could get a bounce back up to like $2 from here. But also, it's probably going to zero. Like, just be real. All right, CSGP CoStar Group. So this thing, obviously, going back to 1999, 98, been going absolutely parabolic. We did see the 821 monthly cross. Obviously, we saw that in our 2000 dot-com bubble burst. We saw that in 2007, 2008 global financial crisis, and we see it now. So what does that tell us? You know, we're likely in the process of one of, if not, you know, the deepest correction this asset has ever had. So how much further down do we go from here? I mean, we don't see any sign of bottoming. Pretty aggressive knife stab down here, so that's potential. The blue stochastic is trying to kind of flatten out right here. Still all red histograms, red slope below the zero line. I mean, you're trying to catch a falling knife right here. My problem with this level is, normally I would like this candle getting bought back up, especially like a couple of them is okay. But we're getting big wicks down, and then we're closing a low, and then closing a new lower low or same low, and then a new lower low, and then a new potential lower low. So even though the wicks were getting bought up initially at this support level, the way that we're consistently closing new monthly lower lows seems likely that this is going to go lower. I mean, it's consistently trending down. So even though we have a lowest low by wick right here and a highest high by wick right here, and you say, well, we have a high, we have a low, so as long as we're not taking out that low, that's good, right? Sort of. But the question is have we just not taken out that low yet, and we have bounced back up, and now we're coming back down to it? Because that's what it seems like to me. Until this actually puts in, you know, now we have a low right here by close, and we have a lower low right here by close. So we've taken out the most recent low. So months without a new low, you know, gets reset to zero here. And now we're in the process of putting in a new low. So the likelihood is it continues to just put in new lows. Earnings coming up on the 26th as well. I would be very hesitant, you know, getting in new positions prior to earnings, or not taking profits on things prior to earnings. Again, I don't know what this is. The weekly has broken below the 200 exponential and simple. The 200 simple has crossed above. The 200 exponential is now red. It cannot get above the 21. So the first sign is a close above the 21 and then the 821 cross, and then reclaiming the 200 exponential and simple. So before you can get bullish on this, you really got to get above like 67. Trying to build up momentum, but also getting a hard sell signal. When we go all the way down to the daily, very much in a bear market, obviously, including that meltdown. That meltdown was leading up to earnings, which was a beat. It like gapped down afterwards. So I'm not sure why. Again, leading up to earnings, this did like okay. And then it was a beat and it melted down. So leading up to earnings right here, I mean, based on these two previous ones, it beat. I mean, here it beat and completely melted down. Here it beat and completely melted down. So like historically speaking, I mean, if this thing gets an earnings beat, I mean, depending how far you want to count that next move afterwards, you know, this thing basically went down 50% after it's beat right here. And then it beat again right here. And where did it go off of that beat? I mean, it literally, you know, went down another 21% immediately off that beat. And then here it beat. And what did it do? It rallied up a couple percent. And then what did it do after that? Came down another 20%. So, I mean, I don't know if it's going to beat. I don't know if it's going to miss. I have no clue. But historically speaking, the best case scenario was an earnings beat, and then it melted down 20 to 40%. So if it misses, does it melt down 90%? 70%? 50%? I don't know. I honestly don't know. I really don't. Looks terrible, though, obviously. I mean, you could put in some kind of like resistance situation like this. and then, some kind of support here. I mean, obviously this is kind of like a little outlier. So if we skip that and just kind of go off these ones, something like this, a little triangle, you could call it a neutral triangle, depending how you draw it. If you drew a little bit more like this, it would look a little bit more neutral. I mean, it's ready to break one way or the other, depending on how you have it drawn, obviously. I would be careful for the fake out. If it breaks down from here and then it looks like it broke from that initial trend line, but really it's just testing the bottom of the range, this is how I would draw it. I would skip this and then draw it more reliably. So realistically, it probably comes down to like 55. We don't know which direction the break's going to happen in. I would say probably to the downside. Yeah, I don't know. Not a lot more we can say on that one. But yeah, that's it. We made it to the end. Got through all of our assets. Del the Pope says XRP in 2018. Yeah, XRP is dead. That's a dead asset. I mean, it went a whole nother cycle, a whole 4-year cycle without putting in a new all-time high. Put it on the list of dead assets with a cult following, which is the only reason they still exist. But yeah, that's it. We're going to go ahead and wrap it up there. Obviously, we know what to look out for over the next weekend/week coming up. You guys know my base case, my bull case, my bear case. You guys know all the cases. We don't have to be right, but we have a strong argument for why we will be right. And also the market is definitely our bitch and continues to just do whatever we say in advance. Not because we are controlling the market, not because we are some soothsayer, but because the market is literally leaving us clues, and we are just taking the time, putting in the effort, scooping up those clues, and then figuring out what the market's trying to tell us. We're following the money, which is the most important thing to do, because that is going to determine the flows are going to determine what the next big move is, what the next big like sector or cycle or asset class, whatever it is. So that's what we're looking out for. We got a couple in our scopes right now. But, there is no easy trade right now, in my opinion. I don't see an easy trade. There's been a lot of easy trades over the last couple of years. I don't see one right now. And if you're going to start talking about easy trades or high probability of success, you should be talking about to the downside, because we're very clearly in a bear market in basically everything but the dollar. Energy is hanging on. Utilities are kind of hanging on. I mean, that's pretty much it. Consumer, staples have kind of rallied back up, so they don't look as bad, but most of these charts are going down and going down aggressively. So, betting against the dollar right now is a dangerous game, and betting on pretty much anything else is a dangerous game. I think that we probably see a little bit of follow through, and at least more upside to another lower high or to a lower high on energy, oil, etc. But who knows? I mean, the way we saw wheat fall out of bed and, a lot of these other commodities, lumber, wheat, all this stuff, sugar, coffee, all these things just falling out of bed, oil falling out of bed. I mean, not unexpected. We literally called the top like perfectly on all of them, which is great and everything, but that's not what we do normally. But the fact of the matter is, the argument or the narrative for this massive bull market in commodities isn't gone now, or in energy, it isn't gone now, but it's giving back some. It's retracing at the moment. So I think there's going to be a lot of opportunity still in some of those same sectors, but we're looking for the next big opportunity. Where is it going to be? Is it going to be in, miners? Is it going to be in, pot stocks? Is it going to be in crypto? Is it going to be in, some other sector we haven't looked at? I mean, we don't know yet. We'll look out for it. But it's going to be a nice big play. The next big one, going to be a nice big play. We don't know where it's going to be as of yet, but we know it's coming. But in the meantime, the most important thing on everyone's radar should basically be that next Fed meeting and our rate hike. If we get 75 basis points, we probably see a quick little pop to the upside and then more downside. If we get 100 basis points, we probably just see immediately more downside. If we get 50 basis points, we probably see some upside follow through. I don't think that's going to happen though. There's still a lot of data points going to be coming out between this rate hike coming up and the next one, because there's no meeting in August. So it goes from July to September. So that will give the Fed quite a bit of time to get some more data. Obviously, everything's slow and it's lagging, and it's probably not going to change anything, at least not for, positive. But at least maybe they can be like a little less negative by then, or a little less hawkish. We'll see. I mean, I don't see inflation coming down. I know people are like, oh, but oil and energy come down and wheat comes down, therefore inflation comes. Sure, but the pricing is on, like, the housing market is so lagged, and, owner's equivalent rents, and there's just so many things to try to factor in to say, okay, well, because gas is coming down, that's the peak in inflation. Because the problem with inflation is, it's like whack-a-mole. You whack it, and then it pops up somewhere else. Because that's what happened. That's what happened to the Federal Reserve, why they dropped the ball so bad, why they fucked up so bad. I mean, now, granted, you guys know how I feel about the Federal Reserve. They're complete trash human beings, trash institution, and under no circumstances ever should the human race be slaves to, like, organized banking cartels around the world. I fucking hate the central banks. I hate the Federal Reserve. I think they're all scumbags, and they should and probably will rot in hell or some other equivalent. That being said, the reason they fucked up so bad was because they were so sure that the inflation on goods was going to come down, which it did. It did. There was a ton of inflation on goods initially because everybody was stuck at home and there was no services being provided because everybody was stuck at home. So they printed a bunch of money to fill the gap, but then we weren't making stuff and there was no way to buy services. So all the money went to stuff instead of being divided between stuff and services. So there was less stuff, there was more money or equivalent amount of money, and then there was no services. So everybody bought the stuff. So the stuff went up. So they said, okay, now that we're reopening, the stuff is not going to be in demand as much. So the inflation's going to come down. And it did. The price of stuff stopped going up. A lot of it came back down. Transportation costs came down. Availability came back in. Things that you couldn't even find in stock are now back in stock again. Everything has come down in stuff for the most part. Unfortunately, it just shifted because it went from goods to services. So then we saw now, plane tickets are like through the roof, and, a bunch of restaurants closed down. So now when you go to a restaurant that's still open, they seem extremely busy, but there's also half as many restaurants. So you're just packing the same people into less places. And then, of course, there's less people working because, lots of attractive girls that would be normally a waitress are now on OnlyFans. Lots of, young guys that would be working in, decent paying jobs, like entry level jobs and stuff like that, are trading crypto or stocks instead of working. So you have basically issue getting people to work these jobs. And now you have service inflation. So all these plane tickets and all these other stuff is going up. So now they're just trying to whack that mole. And then where's it going to go after that? They're like, oh, it's in used cars. So then they whack that mole. And they're like, here come the semiconductors. And then it's in new cars. So they whack that mole. And it's like, oh, the semiconductors and more, cars coming online and everything's going to be gravy soon. And then it's like, okay, finally we got it. And then it's like, oh no, now it's energy prices. So they whack gasoline, they whack natural gas. And they're like, oh, okay, finally that's coming down. Everything's good. And then it's like, oh, now it's the housing market. So it's just a never ending process of things shifting. And why does that keep happening? Well, partially because of like the shift that's taking place where, basically the world tries to figure out what the new normal is. And then part of it also is, you have savvy people speculating. Like if you think the oil market just ran up because of demand for oil, I mean, you're brain dead. Obviously, none of you guys think that. We know why these markets run up and why they go parabolic. It's because of speculation. Sure, there's demand for oil because people need oil. Sure, there's demand for wheat because people need wheat. Sure, there's demand for lumber because people need lumber. But let's be real. These things are not used for hedging physical commodities the same way, at least not in a percentage that they were back in the day. Back in the day, the reason they had futures markets was not so that a farmer could speculate on the wheat that he's going to make. It was so he could lock in those profits. So in case something happened to the price of wheat between now and then, he wouldn't be screwed. he could lock in some of it. Or maybe he needed a bunch of money so he could plant his next crops or buy a new tractor or, whatever the situation is. So that's what the futures were designed for. Now what the futures are used for is rampant speculation. So when we see these rampant speculation in commodities, like suddenly, like wheat or lumber or whatever, oil, it's not because all of a sudden everybody wants this oil and there's all of a sudden a shortage. It's literally a bunch of people speculating, or a bunch of money speculating in advance of these moves to try to take advantage of them. So that's what's happening in all these markets. Every time they whack inflation, they're hitting whatever the previous inflation was. Well, that thing's already pumped. It's already overvalued. Nobody gives a shit anymore. So all the speculation is on to something else. And a perfect example is in the energy market. Energy didn't do shit for decades. And then all of a sudden energy became the big trade and everybody piles into energy. It's not because all of a sudden everybody needs more energy necessarily. We still need the same amount of energy. There's definitely some fundamental, supply and demand constraints that are happening. Obviously there's shifts going on with Russia and the Russian oil and all that stuff and sanctions and everything. But the truth is the oil demand didn't actually change. It just became popular because there was easy money right there. So that's what we're seeing happen in a lot of these speculative assets. And that's the big issue with housing right now is that the idea behind housing is, incentivize people to provide housing and people will provide housing. So the government won't have to make a bunch of housing for poor people. They can just get other, savvy businessmen or women to invest in houses and then create affordable housing and do the job for them. Because obviously the government sucks at everything it tries to do. It's horrible and inefficient. So you let the free market do it. You incentivize them to do it with tax write-offs and whatnot, and you get more of it. Now the problem is that it went from being essentially incentivized by the government to where it was beneficial to the people that we were providing more housing to essentially being, oh wait, hang on. So now instead of the idea being, is that if we only have 100 houses and some of those houses can either be bought and owned by people that live in them, or some of those houses can be bought and owned by someone else and then rented to someone who lives in them. And we only have 100 houses, and let's say it's 50-50 mix. Well, if we see a difference in the division of the houses, we see all of a sudden only 30% of people own that house, and then 70% of people are speculating on a house that they're renting out to someone else. It's taking away supply from people that want to buy. So it's actually having a net negative effect because people are speculating and then renting it. So now there's less supply. Therefore, it affects demand. Therefore, it drives up the prices of the supply. So then we have increased house prices, which means increased rents, which means increased speculation. So everybody runs in for this easy, quick money cash grab. So it's actually having a negative effect right now. So what actually you need to do is you need to incentivize new houses to come online, either for rent or for own, because that's where the real problem is. The supply demand dynamics of housing is not that crazy. It's is there more or less people that need houses? Is there more or less people, coming of age or moving out? Is there more or less people that are going to buy or rent? Is it more affordable or less affordable to buy or rent? You could take some basic calculations and figure out, what the trend's going to look like. But the problem is now is there's so much rules and regulations to build a new house, and there's so much money that goes into building permits and zoning and all the other stuff that by the time you go to build this house, if you try to build some entry-level house for $100,000, you can't make any money on it. So the builder's not going to build that. So they say, well, we could build this $250,000 house and we can make $50,000, or we could build a $100,000 house and we can make $5,000. They're not going to build the $100,000 houses. So essentially what began as a government incentivizing, the free market or, business to create what we need has turned into, rampant speculation that's actually hurting the markets now. Because now people are coming in and buying those houses and renting them out or buying them out and just keeping them because they're so speculative. They go up in value in the future. They're like, oh, I'll just buy up as many houses as I can, never sell any of them. And then, they just keep going up in value. So the real solution is more houses. And the only way we're going to get more houses that are affordable and useful is essentially to disincentivizing speculation in the housing market. And there's lots of ways you can do that. Or by taking away some of the constraints that are stopping this low income housing from coming online. And I say low income, but like cheap, affordable housing. And the only way you're going to stop the speculation is getting rid of some of the incentives. So the problem is right now is, you know, you can do like a, you can basically buy a piece of real estate, you can live in it for a couple of years, and then you can sell it and you don't have to pay profits on, you know, the first, well, I mean, it's different everywhere or whatever, but like $250,000 in profits as long as you live there for like 2 years. So that's an incentive. Otherwise, you could basically buy a house and then sell that property, or an apartment building or whatever, sell that property and roll it into a new property and not have to pay taxes on it because you rolled it into a new property. So the government is incentivizing all of these investors who used to be just private mom and pop landlords with some, you know, businesses, institutions. Now we're seeing BlackRock and all these other, you know, swooping up. Arguably, people are like 50% of the homes. It's a small percentage of the homes, but even if it's 5 or 10% of the homes, once they buy them, they don't come back on the market. It exacerbates that problem further. So the truth of the matter is that the real issue in a lot of these things is the government just has to get the fuck out of the way and let the free market take care of things. Because as long as we continue to try to manipulate things, we essentially get like that bullwhip effect where we overshoot and then we undershoot and then we overshoot and then we undershoot. And as long as we keep trying to play this whack-a-mole, we're never going to take care of the problem unless we let the problems take care of themselves. So, you know, the argument is right now, oh, we need government to do this and mandate this and regulate that. But the problem, in my opinion, is we already have too much government. We have way too much government and way too little free market economy. Because you can manipulate the economy for a while, but it only lasts for a while. So that being said, that's my end of video rant for today. Hopefully everybody enjoyed the stream. Sorry we're a couple minutes late today. I lost track of time on that one. Hopefully everybody enjoyed themselves. Have a great day, great weekend, and make lots and lots of money. Lock in those gains, project your principal, preserve your capital, and obviously, you know, trade with the trend, succeed in the long run. All about that probability of success, that risk-reward ratio, and obviously position sizing. But most importantly right now, we got to stay defensive as the markets are warranting that type of posture. But it is Friday, 1:34 p.m. Eastern Standard Time on 7/15/2022. I am Crypto Trend Trader, and that is our Friday morning market wrap-up. So that's our weekly update. And obviously you can check us out on Sunday or Wednesday for our 8 p.m. till 10 p.m. streams, or every single Friday from 11 till roughly 1 p.m. But remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here. Peace.